In the shadowy corners of Wall Street, where most investors see only failure, Howard Marks discovered a treasure map. His world is not built around buying glamorous tech stocks or chasing momentum, it's about finding gold in the rubble. Distressed debt investing is the art of transforming corporate disaster into opportunity. But how does someone make a fortune from bankruptcies and broken balance sheets? That's the question Marks spent a lifetime answering. Distressed debt begins where most investors give up, when companies default on their obligations, when fear dominates the headlines, and when the financial press declares that it's all over. Yet for Howard Marks and Oaktree Capital, that's often when the story begins. The logic behind this strategy rests on one core principle: the market's tendency to overreact. When panic strikes, investors rush to sell, and the prices of bonds and loans plummet. But Marks understood that not every troubled company is doomed, sometimes the market simply prices in too much fear. He once wrote that the key to distressed investing is understanding not what's broken, but what can be fixed. This approach demands immense emotional discipline. It's easy to follow trends when the market is booming, but much harder to deploy capital when everyone else is running for the exits. Distressed debt investors need to be part analyst, part psychologist, and part philosopher. They analyze financial statements, but more importantly, they interpret human behavior. In many ways, distressed debt is the purest test of contrarian thinking. Marks' brilliance was not in taking random risks but in recognizing asymmetry, situations where potential upside far outweighs the downside. A bond trading at 30 cents on the dollar might look like junk, but if the company restructures and recovers, it could double or triple in value. Marks has called this the margin of safety for the intelligent contrarian. Yet, behind the numbers lies psychology. Marks famously emphasized that understanding cycles of fear and greed is more critical than understanding formulas. In distressed markets, emotion dominates reason. This is why most investors avoid the chaos, and why a few disciplined ones, like Marks, thrive within it. He doesn't predict which companies will fail, instead, he studies how others react when they do. His notes to clients over the decades reflect this clarity of thought, that investing success comes from calm observation amid panic. But there's a deeper layer to this philosophy. Distressed debt investing forces you to confront uncomfortable truths about capitalism itself. Companies rise and fall, markets boom and bust, and out of the ashes, value is reborn. Marks once said, "Our job is not to avoid risk, but to understand it." For him, distressed debt is not about exploiting tragedy, it's about rewarding rationality in a world ruled by emotion. Consider the aftermath of the 2008 financial crisis. While others saw ruins, Marks saw opportunity. Oaktree Capital raised billions to buy up defaulted debt. When markets recovered, these once toxic assets became a goldmine. It wasn't luck, it was preparation meeting panic. He often reminds investors that the seeds of great returns are sown in times of despair. So, what can we learn from this mindset? Perhaps the most important lesson is that courage and patience are the most valuable currencies in distressed investing. Do you have the patience to wait when others are fearful, and the conviction to act when chaos seems absolute? That's what separates Marks' world from the rest. Howard Marks' success in distressed debt is rooted in more than financial calculations, it's built on a profound understanding of risk perception. To invest in failing companies requires a rare combination of skepticism and optimism. You must doubt the consensus yet believe in recovery. Most investors see a bankrupt company as a graveyard, Marks sees a laboratory. It's where the laws of market psychology are tested in their rawest form. Imagine buying bonds in a company that has just defaulted. The headlines scream collapse. Analysts issue sell ratings. Social media calls it a disaster. But for Marks, this environment is fertile soil for exceptional returns if you know what you're doing. He once remarked that risk is not the same as volatility, it's the probability of permanent loss. This distinction is central to his philosophy. While others flee volatility, Marks embraces it, knowing that market overreactions often create mispriced assets. Distressed debt investing isn't just buying cheap, it's identifying when cheap actually means undervalued. In these moments, the investor's emotional strength becomes more valuable than any spreadsheet. Marks often says that the greatest edge in investing is not superior intelligence but superior temperament. the distressed market tests this idea brutally. Prices swing wildly. News flow is pessimistic. Legal battles over restructuring can drag on for months. But underneath the chaos, there are patterns, predictable cycles of emotion that Marx has learned to navigate. During downturns, investors underestimate recovery potential. During upturns, they forget that risk still exists. Marx's letters to investors frequently warn against these extremes. He reminds readers that success depends on what he calls second-level thinking, not asking whether something is good or bad, but whether it's better or worse than what the market expects. This is the mental framework that turns panic into opportunity. Consider the early 1990s junk bond collapse. Most investors ran away from the market. Oaktree, however, dove in. They purchased bonds of companies like RJR Nabisco and Time Warner, trading at steep discounts. Over time, as sentiment normalized, these investments yielded massive returns. The pattern repeated during the Asian financial crisis, the dot-com bust, and the Great Recession. Each time, Oaktree's philosophy was the same: when the world is selling indiscriminately, buy selectively. But here's the paradox: success in distressed debt requires more patience than aggression. Marx teaches that timing the bottom is impossible. Instead, you must be ready to act when others can't. You can't predict, he says, but you can prepare. That preparation involves deep research, understanding capital structures, and most critically, knowing human nature. Fear is predictable. It comes in waves, and when it peaks, so do opportunities. The question is, can you remain rational when the crowd panics? Marx's investing style embodies this stoic rationality. He doesn't view distress as a gamble but as a probability problem. The odds are often in favor of those who can endure discomfort longer than others. His world is one of paradoxes, investing in failure to achieve success, embracing uncertainty to find clarity. And yet, behind all of this lies an almost philosophical truth: the market, like life, is cyclical. Every downturn carries within it the seed of the next recovery. Every panic eventually gives way to calm. The distressed investor's mission is not to predict this transformation but to be there when it happens. Distressed debt investing is often misunderstood as a cold, opportunistic pursuit, making money off others' misfortunes. But Howard Marks sees it differently. To him, it's a discipline of rational optimism, rooted in patience, ethics, and the belief that markets, though imperfect, are ultimately self-correcting. His approach transforms financial chaos into a test of human character. When others see collapse, Marx sees inefficiency. The market's panic doesn't offend him, it excites him, because it reveals moments of truth. At its core, distressed debt investing is not about predicting which companies will rise, but about understanding when fear has gone too far. Marx's writings echo a timeless principle: being early is the same as being wrong, but being late means missing the opportunity entirely. The art lies in being early enough to capture value, yet disciplined enough to avoid delusion. This delicate balance is the essence of Oaktree Capital's success. But what can everyday investors learn from this philosophy? It's not about buying bankrupt bonds, it's about training your mind to recognize when the market's emotions create distortions. We all experience financial distress in some form: moments of fear, regret, or overreaction. Marx's wisdom teaches us to pause, to analyze, and to think second level. In your own investing journey, there will be times when everything looks bleak, when your portfolio falls, when the media declares a crisis, when fear dominates. That's when Howard Marks' voice echoes loudest. The biggest errors in investing come not from information or analysis, but from psychology. Distressed investing, then, becomes a metaphor for life itself, thriving not despite uncertainty, but because of it. Every setback holds hidden value, every downturn an eventual recovery. The true investor learns to endure the darkness, knowing that patience will reveal light. As Marx reminds us, the greatest fortunes are made by those who buy what everyone else is selling and hold on until everyone wants it back. The story of Howard Marks and Oaktree Capital is ultimately a story of courage: the courage to think independently, to stay calm when others lose faith, and to act decisively when opportunity hides behind fear. In the end, the distressed debt market is not just about financial returns, it's about intellectual and emotional resilience. It teaches us that value isn't created in times of comfort, it's created in chaos. So the next time panic spreads, ask yourself, will you follow the crowd, or will you, like Marx, see the beauty in distress? As we've seen, distressed debt isn't just about buying what's broken, it's about understanding why it broke, and seeing value where others only see chaos. Howard Marks mastered this art by combining logic, patience, and emotional control. The question is, could you do the same? Could you keep calm when everyone else is running for the exit? If this story gave you a new perspective on how fortunes are made from fear and failure, don't forget to subscribe for more deep dives into the world of investing wisdom. I'd love to hear your thoughts. Would you dare to invest in distressed assets? Share your opinion in the comments, and let's keep this conversation going. Stay curious, stay rational, and remember, sometimes, the greatest opportunities come disguised as disasters.